So welcome back. So in the previous videos, we talked about option number 1. The first video talks about the option number 1 using itemized deduction, while the second video talks about the optional standard deduction in the computation of the income taxes. Now, our last illustration for this matter or related to income taxes would be involving the use of the second option or the 8% option, which was previously discussed as a new option provided to taxpayers who are self-employed and whose gross sales receipts does not exceed 3 million pesos. So we still have the same illustration. However, we assume here that Ms. Afa signified her intention to be taxed at 8% income tax rate in her first quarter return. So we still have the same questions: income tax due and percentage taxes. So, just some reminder, if you plan to use the 8% option or option number 2, and you are a non-VAT taxpayer, obviously you haven't exceeded 3 million pesos, you need to apply or update your registration information using Form 1905 so that they could end date your registration tax type of percentage tax. This means that you will no longer pay percentage taxes, because remember, option number 2 is a single rate for both income tax and percentage taxes. And in this case, percentage tax will be removed from your information registration. So here is option number 2 illustrated. So let's compute. So you have their gross sales and receipts 1 million. So if you remember, in the discussion of option number 2, it states there that you will be allowed an 8% tax rate based on your gross sales and receipts in excess of 250,000 pesos. And if you remember, when we were tackling about the income tax table revised, you saw there that any income earned between 0 to 250,000 pesos would be tax exempt. So basically, that's the allowed deduction here. So 250,000 is the allowed deduction because it's tax exempt. So you removed 250,000 from 1 million and you will get taxable income of 750,000. This also means if you earned less than or equal to 250,000 in a year gross sales and receipts, then it is not taxable, even under option number 2. So in Ms. Afa's case, she earned 1 million gross sales receipts, so we just simply reduce it by 250,000, which is the allowed deduction under option number 2. So her taxable income then is 750,000 pesos. And we simply compute for the income tax, which is 8% of 750,000, and that would be 60,000 per year. And she will no longer pay for any percentage taxes. Because remember, if you properly end dated your registration, the percentage tax will no longer be imposed on you as a taxpayer. So here are some notes on the 8% option. So the financial statements are no longer required to be attached to the final income tax return. However, existing rules and regulations on bookkeeping and invoicing and receipting shall still apply. And note further that no audit by a CPA is required since gross sales or receipts is less than 3 million pesos. So there's a lot of flexibility on option number 2. So the challenge for you now is to go over your previous tax returns, your income statements, and try to compute which of the options will be most beneficial for you. Will it be option 1 using itemized deduction? Would it be option 1 using optional standard deduction? Or would be option 2 with no percentage taxes? So it's up to you to decide which of the options will be most beneficial for you. So, you may actually pay your income tax return in 2 installments. So when your tax due exceeds 2,000 pesos, you may elect to pay into equal installments. The first installment shall be paid at the time the return is filed. So this is on or before April 15. And the second installment on or before October 15, following the close of the calendar year, of course, to the authorized agent bank within the RDO or Revenue District Office. All right then, that's it for this video. See you in the next lecture.